In recent years, China's low-altitude economy has gained momentum thanks to supportive policies. Ranging from drones and general aviation to emergency rescue, many industries are looking to capture this massive potential market. The appeal of this sector is its potential to drive economic growth and bring new conveniences to logistics, tourism, and emergency services. With increased policy backing, expectations are high. But could this low-altitude economy become just another bubble driven by policy and overheated investment? Follow Asian Business Online for more insights on this evolving story. The low-altitude economy covers sectors like general aviation, drone logistics, tourism, agriculture, and emergency rescue, mainly using airspace below 3,000 meters. Unlike traditional airline and military routes, this opens a unique space for commercial use. According to China's Civil Aviation Administration, it involves areas like aviation manufacturing, infrastructure, services, and tech R&D. Globally, low-altitude markets have been growing for decades. The US, for instance, began opening up low-altitude airspace in the 1980s, with general aviation now adding over $200 billion to its GDP each year. Europe also benefits from low-altitude applications, particularly in drone logistics and tourism. In China, however, this market is just taking off. By 2023, it reached over 500 billion RMB, with projections to grow to 2 trillion RMB by 2030. For example, China's drone market alone grew by nearly 60% annually from 2016 to 2021. China's low-altitude economy has low barriers to entry, strong market demand, and supportive policies. Growth is particularly promising in areas like drone logistics, agricultural drones, and urban tourism. China's share in the global drone market has already jumped from 10% to over 30%, setting up this economy as a new growth driver. Since 2010, China has gradually opened up low-altitude airspace. In 2021, the Civil Aviation Administration issued guidelines encouraging growth in this area, and in 2024, low-altitude economy goals became part of China's annual 2 sessions. The Ministry of Industry and Information Technology recently launched a 2024-2030 General Aviation Plan to build a trillion yuan economy by 2030. The low-altitude economy in China has drawn big players from logistics giants like SF Express and JD.com to drone maker DJI. SF Express has started testing drone logistics in places like Yunnan and Fujian, while DJI is expanding into logistics and mapping applications. Local governments play a big role in supporting this sector. Chengdu, for example, set up a low-altitude economy pilot zone, while Shenzhen launched a drone logistics pilot in 2023, aiming to open more routes over the next 5 years. Provinces like Jiangxi and Shanxi are also establishing drone testing zones, focusing on agricultural and logistics applications. Despite this optimistic outlook, challenges remain. China's strict airspace regulations mean companies often face lengthy approval processes. Infrastructure is also limited. China has fewer than 500 general airports, far behind the 5,000 in the US, restricting market growth. Coordination between airspace management and local policies is also tricky, adding uncertainty for companies. As more companies enter this space, there's an increased risk of airspace congestion and safety issues. Some firms struggle with immature technology, leading to incidents that hurt the industry's safety reputation. Privacy and noise concerns are also growing, especially in urban areas where drone use can disrupt residents' daily lives. Market demand remains a concern. While many companies are moving into drone logistics and tourism, real demand has often fallen short of expectations. Many rely on government support, making self-sustaining profitability difficult. As of 2023, China's drone logistics market was worth 3 billion RMB, but most of this was policy-driven. There are already signs of overheating in China's low-altitude economy. Many companies have entered the market without core technologies, attracting funds simply due to policy support. In 2022 alone, over 200 new drone companies were set up in China, raising concerns of policy-driven growth that may not be sustainable long-term. The situation is reminiscent of China's solar industry. where rapid expansion led to overcapacity and price wars. Experts worry that a similar pattern could emerge here, with false demand and inflated market expectations. There's also a risk that investor optimism could lead to short-sighted strategies. Without careful planning, China's low-altitude economy could repeat the same cycles seen in other industries. Experts emphasize the need for a business model driven by genuine market demand instead of short-term policy incentives. Looking ahead, the low-altitude economy in China may enter a period of consolidation. Companies focusing on drone logistics, emergency services, and mapping could help shape a more sustainable industry. DJI, which has grown through technical expertise rather than rapid diversification, could serve as a model. For long-term growth, tech innovation will be crucial. With advancements in 5G, AI, and autonomous flight, low-altitude applications could expand beyond logistics to include remote medical services, tourism, and agriculture. As China's low-altitude economy matures, it may shape global markets, potentially becoming a leader by 2030. This emerging sector is not only a driver for China's tech innovation and industrial upgrades, but also an airborne bridge connecting it to global markets.